Hello and welcome to our video on the 2008 subprime crisis. This economic crisis had a significant impact on the global economy and has had lingering consequences to this day. In this video, we will explore the causes of this crisis and its impact on the global economy. The subprime crisis began to develop in the 2000s when interest rates began to drop. This led to an increase in demand for mortgage loans, which prompted lenders to accept increasingly lax credit criteria. Borrowers who did not meet traditional credit criteria were included in subprime loans, which were typically adjustable rate loans with higher interest rates. Furthermore, investors began to buy these subprime loans in the form of derivatives such as asset-backed securities, ABS, and mortgage-backed securities, MBS. These derivatives allowed investors to make money by investing in subprime loans, but they also increased the size of the subprime market and vulnerability to a housing price crash. When interest rates began to rise in 2007, many subprime borrowers were unable to repay their loans. Housing prices began to fall, leading to an increase in foreclosures and defaults. This led to a decrease in the value of derivatives tied to subprime loans, resulting in significant losses for investors and banks. The subprime crisis also led to a liquidity crisis on global financial markets, as banks and investors were left with illiquid and worthless assets. This led to a reduction in credit availability, which had an impact on the real economy by reducing investment and consumption. Finally, the subprime crisis led to a global economic recession in 2008 and 2009, with rising unemployment and disruptions to financial markets. Governments and central banks had to intervene to stabilize markets and prevent an even worse financial crisis. The consequences of this economic crisis were felt for many years, with lower growth rates and higher unemployment levels in many countries. In summary, the 2008 subprime crisis was caused by overly lax credit criteria, high demand for mortgage loans, and the use of derivatives to invest in subprime loans. This crisis had a significant impact on the global economy, leading to an economic recession, rising unemployment, and disruptions to financial markets. The consequences of this crisis are still felt today, reminding us of the importance of vigilance and regulation in preventing economic crises in the future. Thank you for watching.